All right, good morning, guys. Today is what is today? Wednesday, September 27th. Sorry, I haven't been on a live session in a while, been working on other things. But anyway, as usual, looking over US 30, gold, and EU. So I'd mentioned to you guys a while back, not too much of a while back. So let's first start off with the daily bias before I go over this trade and slippage got me on this one. Wasn't able to hop in as I wanted to. Anyway, daily bias, bearish on US 30. The last daily closure of an SAR level was bearish. Gold daily bias, again, bearish. EU, again, bearish. Dollar, bearish. I'm sorry, dollar bullish. So as much as I've been wanting, and I'm still bullish for gold, for the rest of the year. So keep in mind, August and September are the ideally worst months in the market, or worst months in the stock market or financial markets. So I do expect this bearishness to continue, but once we do get that bullish change, I was hoping we keep going bullish, but this is the importance of sticking with your daily bias. So up until this day, I was bullish on US 30, but once we closed that below this daily SAR, I was bearish. Now, what I was looking for here, so you guys remember, so right now with the SARs, the reason I'm going over the reason I'm going over the other entry is because on the hourly time frame, on the hourly 4 hour and 1 hour, hourly and 4 hour time frames on gold, EU, and US 30, we do not have any entries. You can see price has been breaking down. So this is the importance of getting that bias, that daily bias, and sticking to it and just following it. So you don't have to use the SAR. And if you're using the SAR, you don't have to use the daily time frame to get your bias, but always have a bias in the market. So always ask yourself, which is why I normally have an issue with consolidating markets or low volatility markets. Ask, if you've been with me for a while now, we have all these instruments. So always ask yourself, is instrument A or B likely to sell or likely to buy? Use that as a bias and look for entries in that direction only. And that will make you, it will cut down on your losses. Yes, you'll have fewer trades, but you don't have to be trading every day. So you can see here, I don't even have any double SARs on the hourly, anywhere close by double sell SARs for US 30. Same thing for the 4 hour time frames. No, actually, wait. This is 31, 34, and 30. No, that's too far apart. So we have these two double SARs on the 4 hour time frame right here. There's no break and continuation. There is no test and rejection. So there's nothing here on the 4 hour time frame. But you can see here on the 4 hour time frame, this might be the first break. So because this candle opened above the sell zone, if it closes above, that would be a break candle. But for you to even think of entering the sell here on US 30, that would you'd have to wait for the next 5 hours, because you need the next 4 hour candle, actually the next 7 hours. So nothing right now for US 30. On the 1 hour, on the 4 hour, we have that zone right there. Gold, we had a sell on gold yesterday. I sent it in the trade ideas. However, I wanted gold to retrace a bit further for me, but you can see we had a double sell SAR here, right? So here you'd have been waiting for break and continuation. So this is the candle that gave you a break. This is the candle that gave you a continuation. So that was the entry right there. Only thing I had, so if you do like a 30 pip stop loss, so these trades will always be there. So that's why I'm not worried about missing trades. So the reason I did, I was looking at this candle as it closed, but I wanted this candle to close a bit further, because as much as this entry, your stop loss would have been above the SARs, what I was really hoping for was a stop loss above this previous high. So this is why I wanted this candle to close maybe somewhere here, and I would have taken it. But unfortunately, I saw this candle even when the candle closed, and I was waiting for just a slight retracement, but you can see gold went all the way to full TP, and you can see I'd sent that trade in the trade ideas even before the trade So this is the zone I was expecting it to close, but it doesn't always happen. But that's an example right there of a break and continuation. But right now, gold on the 1 hour, nothing. I don't see anything. I'm still expecting gold to be bearish. I've been seeing a lot of people this morning trying to buy gold, but I remember I've been part of that stuff. So no, so for me, I just trade in the direction of the trend. So nothing on the 4 hour as well. EU. Look at EU right here. This is why I tell you, like, there's always going to be those entries. You just have to work on your patience. So here, what entry do you see here? Break. And I've been bearish on EU for like it's probably been 3 weeks now. Break, continuation. So you see this candle broke and closed below, and then the continuation candle. You go ahead and enter the sell here. And this is why I like FX pairs, because FX pairs, even with that, because this one was a 25 pip stop loss, or would have been, if the way I trade FX pairs, like 25 pip stop, 50 pips TP. You can see for EU that would have gone ahead and hit. So this is why I like when an SAR hits on entry hits on an FX pair. I like that because most of the times I know like a 25 pip is not actually a big stop loss on an FX pair, but it can give you that quick risk to reward and gives you that nice entry with stop loss above there. But that's an example of a break and continuation. This trade validated at, it would have been like 1 a.m. Eastern Standard Time, so I would have been asleep at that point. But you can see even then, we had that break and continuation, right? Here we have, guess what we have? We have test rejection. So the continuation candle also acted as a test, and then the next candle, test and rejection entry. This was another sell entry on EU right there. This candle that came back above and tested this zone, that's a test candle. The next candle was a rejection candle. You enter the sell. So there was literally 1, 2, 3 sell entries on EU in the same zone, but nothing on the 1 hour time frame for now, nothing on the 4 hour time frame right now for any of these instruments. So which is why I come down to the 15-minute and the 30-minute time frame. So on US 30, the 30-minute time frame, what do we have? 30-minute time frame. I thought this was a double SAR, but it's not. The distance is like 25 pips, so that's not a double SAR to me. So I'll stick to the 15-minute. 15-minute, we have a triple SAR, 1, 2, 3. So what entry can we get here? So I was hoping to get like a break and continuation, but you can see this candle right here did not break that zone of ours. So there's nothing in there as well. What else do we have? So here, the only other entry we can get right now is if US 30 comes back up, and it would be a test and rejection. So if US 30 comes back up, gives us a test and rejection entry and goes back all the way down, but nothing on US 30. I was hoping we get something on the 15-minute or 30. Unfortunately, this happened too fast. Gold, you can see here, we had a double. So there was a 30-minute entry. If you're using the SARs, actually, no, there's this double SARs. Let me delete this because this is the 15-minute. This double SARs right here, you can see, unfortunately, this candle did not close below. Gold has just been tanking today. So, and I see our market maker, Steven, is in here. So you can see, I normally tell you guys when Steven sends out trades, I think he caught that sell from 1953. Anyway, on the 15-minute time frame here, we had a break. So you can see, let me delete this 30-minute one. So you can see here, this is a double SAR on gold, and it's like a 0.3 pip zone. So this was a break, and this was a continuation. Unfortunately, right, I always tell you guys, you don't want to be chasing as much as you would have still been in the trade. This is not even a trade I would have wanted to chase, because keep in mind, for me, I do 30 pips stop on gold, 60 pips TP. As much as that would have hit, for me, this is not a trade I would have taken, because remember, I always ask myself, because you can see that's a break continuation, right? So you enter there. As much as the trade is valid, for me, I always ask myself, relative to where I'm entering, how far are the SARs I'm trading? So here you can see the SARs you're trading would have been, what is this? 20 pips away. So that's like 70% of your stop loss. If you're willing to stomach 70% in drawdown and risk getting faked out, sure, you can, you could have taken the trade and been in full TP. But for me, that's not a trade I would have entered. I would have liked like that candle to close somewhere above here. And then that's when I would have entered. But anyway, that was still a valid break and continuation. It all comes down to your risk, and what you choose to do with that trade. But right now, even on gold, nothing on the, and gold kept dropping, nothing on the 15-minute. EU as well, we've just had so many entries. You can see here we had a double SAR and EU tanked from there. Again here, double SAR, EU tanked from there. So unfortunately, I don't think we'll catch a trade this morning. On the 30-minute time frame, I don't see anything. But I wanted to go over, a few weeks ago, I mentioned to you guys, you can still have your daily bias, and then use the breakout scanner. So I know, I normally, in the past, the way we used to use the breakout scanner is on the 15-minute time frame, but this breakout scanner, like in the beginning of the market. So let's say like this morning, I was bearish on US 30. My bias on US 30 right here is bearish. So if I'm bearish on the market, I would want to see a breakout sell here. However, you don't want to be on too high of a time frame, because the higher you go on the time frame, if you're trying to catch that breakout, this is different from the original breakout strategy, breakout scanner strategy. Because for this one, you're looking for a breakout at 9:30. Between 9:30 and 9:45. So you're looking for a breakout entry in the first couple of minutes before market entry. So you can even do the 1 minute, but you'll see if we go to the 15-minute time frame, you might not always get that market open entry, because of course, the higher, you can see here, the higher the time frame you go, the lower, even though the setting or the entry is going to come, it's going to come much later. So for this breakout that I was looking at, or that I've been looking at, I've been trying to see on the 5-minute time frame, using the breakout scanner. So this morning I saw this trade right here. But then I had my auto trading disabled because I'm using a Forex manager or whatever. So you can see this was the 9:25 candle. So this is when market opened. So when market opened here, there was that sell. So you're looking for a sell entry. It can be on the 15-minute time frame, but more times than not, you're probably now going to get that on market open on the 15-minute time frame, or even on the 30. But on the 5-minute or on the 1 minute, you're going to get that sell or buy entry. But you just have to have a bias and say, I'm bearish for US 30, like this morning. So I saw this. So that's the trade I wanted to hit. So when I went to hit it, my auto trading was was disabled, and the trade went straight into TP. So I wanted to catch a retracement, but by the time gold was coming, US 30 was coming back up, based off of my strategy, after achieving 1:1 risk to reward, this trade would have already been at break even. So I normally, as much as the trade came back up, so for me, the only way I'll re-enter a trade, like if my computer is frozen or if my charts freeze, is if the trade hasn't reached a 1:1. But if I miss a trade, and the trade achieves a 1:1 risk to reward and comes back up, I'm not going to enter that trade, because it can now be in the reversing pattern. So I don't want to be entering a trade that I should be already at break even at. But let's say in this instance, the trade came down slightly into profit and came back up. At that point, I would have entered that trade because it had not already achieved the 1:1. But this is what you'd be looking for, ideally on the 5-minute or 1 minute, before the first 10 minutes of the market to market open. It might also give you an entry. So unfortunately, I haven't traded for like 6 days. So I've been just working on other things. But anyway, so that's how you'd use the breakout scanner and just look for that. But always keep in mind, always have a daily bias. But if you are the kind of person who trades both buys and sells and it works for you, stick to that. But if you can only trade one direction like me, just stick to the daily bias. So I don't think we'll see, based off of everything that I've looked at, I don't think we'll catch any other trades. So if you guys, and you can see gold around 9:30 did not have anything, right? So the previous sell breakout on gold was at 4 a.m. So you're looking for breakout entries around 9:30 a.m. to like 9:45. So the first 10 or 15 minutes of market open. So it's not going to happen every day, but when it happens, it can be one of the things you should look out for. Yeah, so I don't see anything. So my right now, unless I choose, I don't take entries on the 5 minutes, so I'm not really going to force anything. So if you guys have any questions, feel free to ask. But right now, everything is bearish. And you can see, everything is just pushing. So never be, because I've seen a couple of people in some other groups try to catch gold buys the whole of this morning, and they've just been getting burnt. So the other thing, the reason why I have like this, and I like, Steven talks about create a plan and trade the plan. So what marking up these SARs does for me is that it tells me I'm not trading until the trade goes or gets to this zone. Because one of the thing I used to look at when following people used to do daily live streaming, as much as we might not catch trades during every live stream here, the one thing that I noticed is that you're so under pressure to try and trade every day, and then you end up just messing up and just finding yourself in losses. So you literally don't have to trade every day. So like for me, I know that for me to trade US 30 gold or EU has to, like for right now, I know US 30. For me to trade US 30, I have to wait for US 30 here. And for this to happen, it has to give me like a test and rejection entry, right? Because US 30 would have to come back up here, test, close down here, and then the next candle, I would need the next candle to also close down here. So that gives me a lot of patience. And if I don't see that entry, I'll just maybe come back later. If it's the hours that I normally don't trade, 3 p.m. to 11 p.m. Eastern Standard Time, I just stay out of the market. And I can, with a plan, whether it's with my SARs, whether it's with other plans out there, I can guarantee you that if you stick to your plan, you'll be more profitable than when you used to trade like on a daily basis. So like for me, literally, for the last time I traded, I think was last Tuesday when we got manipulated out of US 30 on Tuesday. The other thing to consider with gold, where we are right now, if you turn on the markups indicator, we have a daily bullish order block right here. So, and keep in mind, these zones don't come up often. And unfortunately, today I'm not looking for buys on gold. But if you guys remember last time on US 30 for the Tuesday trade, when we got faked out, US 30 had already been in daily bullish order block, and then we got like a test and rejection entry on the 15-minute time frame. But what US 30 did, it came down, broke the daily bullish high order block, and then the daily bullish low order block. So right now, if you're looking for buys on gold, wait for gold to drop down. So don't trade on this OB as much as it's a daily, because I'm pretty sure if we turn on the zones indicator, we have a bunch of buyers here. But don't just impulse, don't buy on impulse. At the very least, what I would do, so let me see if I can mark up a gold buy right here. So I'll put my green lines, but again, I'm not bullish on gold, but I just want to show you guys how I would enter. So there's no, okay, so we know we are at a daily OB. Okay, so there's no, what are they called? There are no double SARs on the 15-minute, no double SARs on the 30-minute. On the 1 hour, let's see if we have any double. And I'm looking for buy SAR. So you can see where all these buy SARs are. They're all the way up there. So 1 hour, nothing. 4 hour, nothing as well. But keep in mind, gold hasn't been here for a minute. And you can see we might be forming that possibly completing structure. So there's nothing here unless you zoom all the way back to your left. So there's this, that's on the 4 hour. So keep in mind, the SARs are limited by TradingView's capabilities. So you can only extend them for 500 candles maximum. So we do have a double buy SAR here on the 4 hour time frame for gold. So personally, if I was buying gold, what I would do, I would wait for gold to come down here, and then I would drop down to the 5 minutes. I would turn off extension of my SAR so that I only have a live SAR. And then I would wait for 2 candle closures. So what I would want here, if I was looking to buy gold, which I am not, is for gold to be manipulated down. And you see, these are the live SARs, right? The live buy SARs. And then I would wait for gold to come back up. So as gold is coming back up, guess what it will do? It will create a live buy SAR on the 5 minute. So whether it's on the 5 minute, whether it's on the 1 minute, but based off of how gold is moving, I would advise you to probably wait on the 5 minute. And then you'd wait for 2 candle closures on any of this live SAR. So you'd look for, so this was a fake out because there was only 1 candle closure, but you see like what happened here, where there was 1 candle closure and then the next candle also closed above. So you'd look for a situation like this to form somewhere below here, because now you would want that order block and the buyers to use that momentum, because what the SAR also shows you is the momentum. So as much as there are live SARs that have been created, you know, in this move down here, you can see we really didn't have like 2 candle closures on either of them. So that's why you want to look out for those 2 candle closures, because that will give you that nice momentum. So that's one thing I learned when we got burnt for that US 30 trade last week. And you can see we literally got faked out and US 30 pumped all the way back up. So when trading around this daily bullish order blocks, and you can see, right, it's at that daily bullish low. At these order blocks that rarely come up, whether it's the daily or the monthly, wait for the whole order block to be tested and then drop down to the 5 minute or maybe even the 1 minute if you want. Wait for a live 1 minute SAR and then wait for, at that point, it would be either break and continuation or a test and rejection. So you can see here, if you're doing the 1 minute live SAR and you're trading the order blocks, you'd be looking for something like this, 2 candle closures. So just, you know, pick your time frame. It can be the 5 minute, it can be the 1 minute, but just realize that the higher the time frame, the better. So if you're asking me, is 5 minute entry better than 1? It's safer, but the 1 minute entry will give you a better entry, but you just have to have like a high probability that you're not going to get faked out. So if you're doing it on the 1 minute, right, this would have been an entry here, but you can see you could have gotten faked out. I'm sorry, not faked out, depending on your risk to reward, right? Trade could have been, and we normally talk about make sure your stop loss being below the SAR you're trading. So here you can see with this trade, you could have had like a 10 pip stop, and that's on gold. So if you want a 1:2, I'm sorry, no, not 10 pip stop. Yeah, you know what? I think it's a 10 pip stop. Yeah, you could have had a 10 pip stop on gold if you wanted your stop loss to be below that SAR, or if you wanted it to be below the low of this other candle. You could have had your 1:2, and then you go ahead and set break even once you've achieved a 1:1. But, you know, I'm not there yet to be trading with a to be trading with a 10 pip stop loss. You know, Steven is the one who's good at that. Yeah, but just make sure, know that on the 1 minute, 1 minute will give you a nice entry, like really, really nice entry, but it's more likely to be faked out. And I'm just comparing it to the 5 minute. 5 minute will give you a safer entry, but you might have to wait longer, and the move might have already happened compared to the 1 minute, or part of the move might have happened compared to the 1 minute. So yeah, anyway, I'm not looking to buy, I'm not looking to buy gold right now. For me, I just stick to my daily bias. So until we get a daily closure above the SAR. So not to say, right, gold can reverse from where it is right now. And by the time the daily buy or live buy SAR shows up, gold is already up in profit. But for me, I'm just sticking to that. So I will I'll go back to my cells and then wait for gold to retrace all the way up. But anyway, I think that's going to be it for the day, unless anybody has any questions. I'll just put this back to how it was. Yeah, but if you guys are looking for buys on gold, we are definitely in a daily bullish order block area. Turn this back. Yeah, I wish, let me see, what time is it? I can stay on for I don't think this candle is going to get all the way up here. So anyway, like for me, this is what I'm waiting for US 30, around 33,700 to catch another sell. On gold, if I was to wait to sell gold, gold would have to go back all the way to 1900. So because I don't go anywhere lower than the 15 minutes when I'm trading extended SARs. On EU, for me to even think of selling EU, it would have to come all the way to 1.05591. Also keep in mind, some of these instruments have just been, especially gold and EU, they've just been, trending lower and lower for like, that's July. So going 2 months, EU has been trending downwards for 2 months. So you might just want to hold off on some of these sales, especially gold and probably EU. Or if you're going to enter sales, just wait for retracement back up. But I wouldn't recommend you to sell where these instruments are, like gold and EU. I wouldn't recommend anybody to sell like where we are. Like wait for some sort of retracement so that you can get a nice probability back down. So which is why, like for me, I'm not entering like a US 30 sell here. For me to sell US 30, I would need US 30 to come back up there on the 15-minute time frame, or to come back. I don't think there was an entry on the 30-minute time frame for US 30. But anyway, I think that should be it. Let me know if you guys have any questions. If not, I'll hopefully catch you guys tomorrow. So no trading or no trade taken today. Still up for the month, 3.7%. So that's all that matters. So even though we are not trading every day, I'm pretty sure I probably have like a better win rate than some of the people who trade every day. But just stick to your lane. See what works for you. There are people who trade every day and make like 5% in one day. So, but just make sure you're learning from your you're learning from your mistakes. And once you learn from your mistakes, like for me nowadays, I don't care if I get a trade or not. Even when I've been starting or when I've been in deep with this community, there's some days that I felt like I needed to trade, but nowadays it's like, if I don't, and I'm normally honest with you guys on that. So you'll never see me, or you rarely, if I have, that's if I have, I don't force any trades on the live session. And sometimes I'll be like, I saw this trade, and then I'll tell you guys, oh, like today, literally, when I clicked sell, my thing said auto trading disabled. By the time I enabled auto trading, the trade was already in profit. So like, I'll be honest with you guys, so that at least in future, if it's 9:30, as much as maybe I may start the live session a bit late, then you can be like, okay, if Michael was on the live session, this is what you would be looking at. So my goal is to get you guys to a point where you don't need me to be trading, because I've been in communities where if the person did not come that day on the live session, you'd have people either worried or they don't know what to do. So mine is always pretty simple. So if you're ever in doubt, just use the SARs, mark up the 1 hour and 4 hour zones. And then maybe at 9:30, 9:45, look at that. That is literally what I will be looking at. I don't do anything different. I don't do anything that's secret or that I don't show out there. That is literally every trade that I take is always based off of something that I've taught you guys. But anyway, if you guys have any last questions, I'll hang on for like a minute and then just look at a couple of things. But if you don't, then I will see you guys tomorrow.
One thing. So from 1929, yesterday when they've been dropping gold and EU as well, but gold from 1929. What SARs did you see on the 4 hour and the 1 hour?
1929. So 1929, if I want to go to the 4 hour, 1929, 29. Okay, so 1929, we have this. So this zone, so the first one, what's this big zone? I think these are 2 zones. Let me do this. All right, so this zone, we have triple SARs. So for gold, if I'm doing a 30 pip stop loss on gold, I want my SAR zone to be like anything up to 10 pips. I don't want such a wide SAR. So for example, here I can tell that this can be a possible double SAR, or it is a double SAR, because even when I look at the difference between these two SARs, it's 1928.4, 1928.3. That is a 0 point, at most 0.2 pip zone. That's amazing for an SAR. The zone that's below it, 1928.051. So what I will do here, so the difference between the top and the bottom is a 0.5 SAR zone. So here you can either have a triple SAR or double. But in this case, since the distance from the top to the bottom is like 0.5 pips, I'll just call that a triple SAR. So here, if I was trading this zone and it's around your 1925 area, I would be looking for what? The same things, either break and continuation or test and rejection. So automatically here, I see if I rewind this, if I replay this, you'll see this candle. And you can see at that point, before this candle was formed, it was a double SAR because you can see the other SAR disappeared. So when that candle broke, it did two things. It closed below the double SAR and created one other SAR that's in between. So at that point, instead of a double SAR, it became a triple SAR. But the original zone was a double SAR. So it gives you a break candle. So you don't trade this. This is the 4 hour, and we'll go down to the 1 hour. You don't trade this. You want to wait for the next candle because this would be a break and continuation. So you'd want to wait for the next 4 hour candle. So if the next 4 hour candle closed above this zone, above 1928.5 or above your top SAR, your break and continuation entry, your break and continuation entry would be invalid. So I'll mark that up. So your break and continuation entry would have been invalid. So break and continuation sell. All right. So, normally I would come in there and mark it up as a possible zone right there. I think there's an easier way to resize this. Okay, so now I'd be waiting for the next 4 hour candle. Let's see what the next 4 hour candle did. You can see what the next 4 hour candle did. Tried to break above, but closed below. So if I zoom in, you can see it closed literally below that zone. And you can see how it started. There was a lot of selling pressure, and then the candle came back up. Okay, also, what's the time? The time here was, so this candle opened at, this is 9 p.m., 9 p.m. candle. So I guess it closed at what, 1 a.m. So the next candle, you would have entered the sell. So at this point, so remember, I always tell you guys, if you're trading the 4 hour and 1 hour, and then the trade is validated next to the SARs, you do not have to go down to the 5 minute and the 1 minute. The only times you'll go to the 5 minute and 1 minute is if, say, this 4 hour had closed somewhere down here. Because if it had closed somewhere down here, you could have seen how far from the SARs you were. So in this instance, if I was trading this candle, I would have entered on impulse because my entry is literally like 1 pip away from the SARs that I'm trading. So this would have been like my ideal entry for, so whether it's on the 1 hour, whether it's on the 4 hour time frame. So 30 pip stop, 60 pip TP. Okay, let's see what the next candle did. You can see almost got it. And this is the importance of choosing like that entry. Like when I tell you guys, like for me, most of my SARs, like I'm normally on point. Like I can tell you with like a 70 to 80% probability gold is going to sell, gold is going to buy. The question is, when you get into that buy, when you get into that sell, are you going to survive being manipulated? So this right here, so you see what happened up here? They came up, tried to close above those double SARs, but the sellers brought them all the way back down. And you can see the trade came like within 19.3, 1930.5, 0.4 pips away from your stop loss. So this was a stop hunt. So this is why I always stress, I would rather lose a trade if it's far away from my SARs. Like I'm not gonna, like the one I showed you guys for US 30 or for gold yesterday, I was fine losing that trade because my entry point, I was like, man, I can get as much as I knew gold was going to sell, I would have gotten, or I had a chance of getting manipulated. But anyway, with this trade, you would have already achieved your 1:1. You go ahead and set break even on that trade. And then the next candle straight into full TP. So that's your 1929, 1928 zone. Now, if we keep going, there's another entry, the same zone, if I'm not wrong, I think this one. Now, when gold comes back up, what entry now is this? Gold is coming from the bottom. I am still biased for a sell on gold. This right here, since the sell zone is above where price is, this lines up for a test and rejection entry. So you would have already cashed in on your test and rejection. Now here, this for you would have been, or for me, if I was trading it, would be a test and rejection for a sell. Okay, so same zone. So doing, nothing different, but just following the test and rejection. This is annoying to do. Yeah, so same thing, test and rejection. So this candle attempted to close above my triple SAR zone. So for me to sell, I don't want to see this candle closing. If it closes, then I would have to probably wait for a reversal and get maybe a break and continuation. So this candle gave me a test entry. What I want for the next candle, I don't want the next candle to close anywhere above this zone. So what did the next candle do? The next candle did not close above that zone and closed here. So in this zone, I go ahead, do my 30 pips stop loss, 60 pips TP. So here I ask myself, at the close of this candle, how far? So you can see here, the distance between my entry compared to this other trade, the distance between my entry and my SARs, this is like 80% of my stop loss. Am I willing to take that risk? So for me with this trade, I don't think I would have taken it. Or if I took it, if I was like, I risked 0.75% per trade, I would have risked like 0.375 and saved the other 0.375 in case the trade got a little bit more pushed to the upside. So here in this instance, so you can see that is the reason why I wouldn't have entered. So this one, depending on your slippage or your spread, you could have gotten slipped out of this trade because this trade, it actually did not hit stop loss, but you can see it's like, depending on your spread or slippage, your broker could have slipped you out and you could have been so mad at yourself. So if you did like what I mentioned, you wait for and actually, if you actually entered on yeah, you still would have survived. So this is the importance of always asking yourself. So for me here, I would have entered with maybe 0.375 and then saved the other 0.375. But I already told you guys, I wasn't right. This is just a red flag to me. So this is the part where you wait for the trade right here. So you wait for the trade right there, and then you go down to the 1 minute and 5 minute timeframes, and then do not extend your SARs. So the only timeframes I do not extend my SARs daily, 5 minute and 1 minute, because if you extend your SARs on the 5 minute and on the 1 minute, your chart will become even messier. So you can see here, if I go down to the 5 minute, like, what is this? And guess what? I go down to the 1 minute, even worse. Like, I wouldn't even be knowing what I'm trading here. So this is the reason why I do not extend my SARs on the 5 minute and 5 and 1 minute. So here for this trade, yes, the trade was valid here and you could have, fingers crossed, probably survived. But for me, I would have said, okay, yes, the trade is valid. I got my test and rejection, but the distance between my entry and my SARs is like 70%, 80% of my stop loss. Am I willing to take that risk? No. So I'll wait for retracement up here. And in this zone right here, I will wait for gold to reverse back down and give me a break and continuation on a 5 minute or 1 minute live SAR. And guess what? I could have gotten that maybe on the 5 minute, maybe I would have gotten that somewhere here as gold was coming back down. On the 1 minute, would have probably gotten something along these lines, because remember, 1 minute will give you that nice entry, but riskier. But in this case, the trade was already valid. So so long as the trade is valid, you should be fine. What you don't want is to FOMO and all of that. So in this instance, I would have waited here, and you can see probably gotten filled in and trade went into full TP. So that's your 1929 zone. I'm pretty sure if we go down to the 1 hour, so it's the same logic. Even though we go down to the 1 hour, if there was some entries around 1929, 28, so for gold, there was nothing on 1929, 28 area.
Oh, yes, you're only looking at the doubles, right?
Yes. So anything that at least a double and above. So the more the better. So sometimes you'll see 5 SARs in one place, even better. So you see, like even here, this gold, this is a triple. This is nice right there. So you can still trade singles, but it's a game of probabilities. So for me, anything that's at least a double has more probability. Anything that's a single, it still works, but the probability might not be, you might need some other additional confluences as opposed to just it by itself. Yeah.
Last week, on Friday, does it go back any further, the SAR? If you go to 1914, when they took it from 1914 to 1929 on Friday.
On Friday. Wait, this Friday or the previous Friday?
The last Friday that just went. So today's Wednesday. Yeah, the Friday that just went. Last Friday. Yeah.
So that was the 22nd.
Yeah.
Yeah, 22nd is that one for 1929, unless you mean the previous one.
The one from 1914, like from the bottom. They took it up.
1914. When they took it up or took it down?
I took it up.
And Friday, you say? I don't see any 1940, unless you say unless you mean the other Friday for the 14th, the 15th. I don't know if that's the one you mean.
No, it was last Friday. Yeah.
Of the 22nd?
22nd. Yeah, 22nd.
Oh, so you say
What
they
happened?
took it up from
Yeah.
1914. So
Yeah.
here, I mean, for me, I was bearish on gold, but if you turn on the buy SARs here, so I turned off the sell. So sell SAR. So here, this is the 1 hour. What is the distance between this? 1914.8, 1913. So this, I wouldn't consider this a double SAR. Like the distance is 15 pips, and your stop loss is 30 pips. So I wouldn't force this as a double SAR. So on the 4 hour, there is 1914.9, 19. So this can be a double because it's about 10 pips. So and that lines up with your Friday. So this would have been a break and continuation for a buy, because this right here, if I change the color, I don't want to keep changing back and forth because anyway, this would have been, because the top SAR was 1914.9, the bottom one 1913.9. So that's actually a 10 pip zone. So it lines up with how far my SAR should be from each other. Now, this was a break and continuation entry. You had this candle that broke and closed above. The next candle continued. So here, if you're asking yourself, the entry would have been valid here. And then you ask yourself how far, using a 30 pip stop loss, ask yourself, are you willing to take that? So you can see with this trade, even with a 30 pip stop loss, your stop loss wouldn't allow for it to be below the SAR. So for me here, this is one of those trades. If I was biased for a buy on gold, which I wasn't, by then I would have waited for a retracement down here, but you can see the trade never came back down. So it's always a game. If you took the risk and entered here, sure, and entered with full risk or the full risk you do per trade, you would have been full TP. So it always comes down to, like, the easiest thing to see is if a trade is valid or not. That is the easiest. The hard part is, are you willing to take, especially if your entry is not close to your SARs? That's the hard part. Like, are you going to wait? Are you going to risk it? Are you going to go in with half risk? So for me, I always choose to be safer, because I know, like, for example, here, we had another test and rejection, the same zone if I was looking to buy, but you can see even with this trade, 1919 stop loss 30 pips, 1916, I would have gotten left again by this trade. So it's always just understanding that there's always going to be other entries, but that's one trade right there, the zone you just mentioned on Friday, 1914 break and continuation entry.
So the continuation candle, it closed. Is it how far did it close from the SAR? Is that too far, do you say?
Yes. So the continuation candle closed literally 110% of my stop loss. So it closed like 35 pips above the SARs. My stop loss is 30 pips. Now, you don't have to trade with a 30 pip stop like me. You can expand. The main thing is, make sure your stop loss is below your SAR. So whatever you do, make sure your stop loss is below those SARs. So here, for me to have had a stop loss below these SARs, that's like a 40, 45, I'll call it 45 pip stop. Now, for me to have a 1:2 risk to reward, I would have to have held gold for 90 pips. So it's always that decision, right? It would have still hit TP either way, even though you went for 100 pip stop loss, 200 pips TP. But for me, I just want to stick with, a 30 pip stop on gold. I don't want to go. I mean, in the past, you guys have seen me trade with 100 pip stop on gold, 200 pip TP. But nowadays, I just want to be in a trade that goes instantly into TP or stop loss or break even. So, but the key thing, right, identifying these zones, that's the easiest, but always make sure, you want to make sure that your stop is below that SAR. Now you don't have to, that's just what I recommend. But even though you want to use the 30 pip and your stop loss is not above or below the SARs, so long as you understand that you can get stopped out, and so long as you don't start being mad at yourself, there are people here who could have taken this trade, and if they got stopped out, they would have been like, you know what, it is what it is, I'll move on to the next trade. But I know there are people, and I'm one of those people, that if I entered this trade with a 30 pip stop and I knew my stop loss wasn't below my SARs, and this trade came back down and manipulated me, I would have literally gotten mad at myself. I would have been like, yo, you always say that your stop loss needs to be below your SARs. Look at what happens when you break your rules. And then I start feeling bad about myself. That's who I am personally. But if you're like a risk taker and you're like, whatever happens, happens, if a trade is valid for you, go ahead and take it. There are people who are good with handling such things. I'm just not good at that.
Oh yeah, so you meant that if it went the other way, basically.
Yeah, if the trade went against me here, I would have been so mad. But there are people who, if this trade went against them, they wouldn't have been mad. They would have been like, I knew the risk I was taking, on to the next one. But for me, I know myself, I would have been like, why do you? Because for me, I write everything down. So for me, part of my rules, and I have those rules here for the SAR, stop loss at the very least, let it be below the SAR. For a better stop loss, let it be below the previous high low.
So
yeah,
this entry, even though the continuation candle has closed a little far from the SAR, for this type of trade, you'd have to go down to the 5 minute, right? The 1 minute.
Yes, correct. Now for this entry, what I would have done, I would have gone down to the 1 minute or 5 minute, and who knows, maybe I would have gotten this entry here and allowed my stop loss to be below this SAR. Yeah, so you're right. This is a kind of entry that I will go down to the 5 minute and to the 1 minute, because it doesn't satisfy my stop loss rule.
Okay, I see, bro.
Yeah. Perfect. All right. Any other questions? I will get rid of this because I am not looking to buy gold. And yeah, once you guys start learning, and it doesn't have to be like, just find a strategy that allows you to see where US 30, where gold is going, like for tomorrow. Like if you're done trading today, ask yourself tomorrow morning, today, where do I see US 30 going? Where do I see gold going? And stick to that, man. That is going to be much easier on you guys. So you can see here, for me, I'm just waiting for this zone. Yeah, so nothing else. So the forecast on US 30, so keep in mind, I'm still expecting US 30 to create a new all-time high before the end of this year. And I'm still waiting it to create the, so here, looking to the left, so it can possibly even go down to this zone. But anyway, eventually, like once September is done, I'm expecting something like this to happen for US 30, create, and this is based off of the last 10 years of data, right? US 30 normally has a mid-range or like a sell-off period between July, August, sometimes September. If you look that, the last 10 years, if you just backtest that, and I need to do the backtest for gold. So for me, that overall outlook for US 30 is based off of this. So you can see like in 2018, the mid-range period was June, same thing as 2019, 2017, same thing. So June to September, which also lines up with the summer, the months of summer, because you normally have a sell-off in the markets in August, September, or June to September, or June to August. So just do the back test for the last 10 years on your favorite instrument to trade, and that will also give you the direction of things. So for me, as much as US 30 is dropping, I'll catch my sells when I do need, but I think when US 30 forms or has a daily that closes above a live SAR, above a live buy SAR, I think that will be the opportunity to now start grabbing. And for me, I like being in buys for US30. To be honest with you guys, when I saw this candle, this daily candle, I really did not want to see or to change my bias to be bearish on US30, because US30, keep in mind, US30 is a directional asset. So most of the times it always trends to the upside. Like if you look at it on the monthly, on the yearly time frame, always goes up. So I normally don't feel too comfortable being in sales for US30. So even for me, it's a new thing I'm learning to adapt to, adapting to taking sales on US30. But anyway, so you can see, as much as, even though it closed down there, you can see US30 has been selling this whole time. So just have for me, it's the SAR that tells me with like a X amount of probability that US30 gold EU is going to trend or is going to go in this direction. And then I plan, even for you guys who use bots out there, which is probably where I met some of y'all, you can also use this, set your bot to buy only or sell only. You're going to be doing better than a good amount of other people. Because I think consolidation, I don't have issues with consolidating markets, but I think it's kind of hard to tell when something is going to break out. So I think it's easier for you to learn how an instrument moves and then have like a high probability to tell that it's going to either move up or move down. All right.
When you were talking about Axel's bot, his bot, right? Have you done it on? Have you put it on any challenges?
Oh yeah. I was the if you're talking, I mean, there's other bots, but if you're talking about his, I was like if you go on his channel, I was the first person, or probably the first person he did an interview with. Yeah, I passed like a bunch of challenges way back when he first started with it. But the markets have changed since then. Yeah, if you go back, you'll see like the first interview.
The OG user.
Right, I was like the original one of the original users. Yeah, but even with his, just use this and set, like right now, if I was using it, I mean, I still use it on some of my personals, but I just focus a lot on manual. But even on the accounts that I have, and I have other EAs as well, it doesn't have to be his, but just set it to sales only. Like this whole time you'd have been banking, because keep in mind, I've been biased on sales on gold since Wednesday, September 6th. So from this day on, my EAs, were just selling gold this whole time, selling. But now is the time then you ask yourself, now here, I know, this instruments, EU and whatever, but you can drop down to like the 4-hour time frame. And we talked about this a while back. If you've seen an instrument trending, like EU has been trending to the downside for like 2 months, it can just, and Stephen can probably give us like a better view of EU. But here I would be cautious selling EU. Wait, like right now at that bottom. But if I wanted to try and see when it might reverse, I would still use the SARs, but instead of the daily, because before we get a daily buy SAR, EU at that point must have just reversed like a lot. But if I go down on the 4-hour, I would be cautious or curious to see if we get a daily closure above a live SAR on the 4-hour, or maybe I can do the 1-hour so as to tell me, okay, maybe just hold off on the sales for now and observe what happens on this hourly live SAR, if that makes sense. Yeah. So
do you keep it on? Yeah.
No, I keep it on the daily. But like right now on US30, since for me, I'm waiting on the buys for US30. I'm gonna start checking what's going on the 4, but this is the live SAR because that's what I'm getting directional. So you can see like US30 here created this live buy SAR, but nothing closed above it. So right now on the 4-hour time frame, I'll be cautious, or I'll be looking out to see what's going on a daily live 4-hour SAR. And if I get US30 closing above a live daily 4-hour SAR, it might be time for me to start winding up on sales for US30. I don't know about gold or about EU. Stephen can tell us more about EU, but for me, I know, I've been trading US30 for like 3 years. So I know that pattern, and especially even without doing this back testing, if you look at the last few years, US30 always closes, or most of the times closes the year with like a high pump. So
yeah. Do you keep it on all day these days?
Yeah. What? You mean the EA?
For US30, yeah.
No, I don't. Dude, I never got the year to work. I mean, for US30, man, US30 is crazy. I never got I mean, it sometimes you make what 2K, 3K, but when you decide when US 30 trends, you're done for. So when I used to trade, and nowadays it's on personal accounts, so I don't really mind drawdown and all, but I really haven't been having drawdown. But when I used to trade with the EA, say for US 30, I'm not saying it's not possible. I think US 30 people should stick with buys or sells only. If they can do consolidation, well and good, but I never got the bot to work consistently on US 30. Again, that was before I had, like, right now I think I can be consistent with it, but I just choose to stick with maybe gold and other FX pairs. But right now, if I was doing the bot on US 30, I would literally, even with anything else, I would literally be doing buys or sells only, because again, traders are different. The issue for me with the bot is, if I'm trading consolidation, I don't know when enough is enough. So, and also I don't know when the consolidation, I don't have a high probability to say that consolidation is over tomorrow. But with this SAR, I know that until I have that daily closure above a zone, like, that's my cutoff. But when trading consolidation, unless you can find, again, I'm not saying it's not possible. I'm just saying myself, psychologically, I never know when enough is enough. But I've always been working to that point to become a trader that knows that enough is enough. So if you can be like, there are people who are good with daily targets, and they're good with that. For me, I'm not good with having a daily target. For me, it's more of a monthly target or something. So it can work, but I never got it to work consistently with US 30. Gold, I think it's a good one to run with the bot, especially because it's pretty volatile. Other FX pairs out there, AJ is a good one, GBP and ZD, especially, and I'll tell you guys, you see GBP and ZD, guess what I've been doing this whole time from here? Selling. GBP and ZD has just been selling and selling and selling for me this whole time. So, now that I have all this, I think I would have been a more profitable EA user way back if I had the knowledge I have right now. But since you can't take that back or whatnot, now the only thing I can do is, move forward with it. And for me, I also have my own EAs and all. So for me, this whole time, and you don't need his, right? If you guys have his, that's perfect. But you just need an EA that works, and then you can just set buys only or sells only.
Yeah, even Desire was talking about, he said it doesn't work. Like, he's tried it and blew, I don't know.
Yeah, dude, EAs, man, you have to, I don't know, you have to have like a lot of discipline to use an EA, just like to put it on there. But like with technical analysis, and that's what I told Desire, like, he should try doing the buys only or sells only with his EA. And I think, well, I saw him, but he dropped off a while back. But yeah, I think he'll also have a better returns, because the issue is consolidation is good and all, but you never know. I don't know, maybe there's other indicators or other strategies out there that can tell you something is going to consolidate over X period. I don't, I think for me, it's just hard to predict a consolidation. But for me, if I can predict a consolidation, that is even perfect. But what if I can predict a trend? Yeah, sure, I'm not going to make as much money during consolidation, but if a trend breaks out and I'm catching the direction of the trend, then overall I'm going to be more consistent. Maybe I'm not going to make as much money as people who trade consolidations, who knows? But for me, I just care that every day I'm ending up in positive, and even though I'm in drawdown, I'm not worried. Like right now, can you imagine somebody who had the EA on GBP and ZD, right? The amount of times they've hit stop, right? This whole move to, and some people consider, and GBP and ZD is a good pair to run the EA on, because most of the times it just consolidates. You see, like this whole period, most of the times it just consolidates. But the one day it's going to choose to break up, you're gonna cry. You're you're gonna be out. So for me, it's like, what can I use to tell me X instrument is going up? What can I use? And for me, right, this whole time, I told you guys, the other thing is, which is why I'm telling you guys to be cautious about instruments that have been trending for a while. Anybody, as much as I was still bullish on GBP and ZD the whole time up here, by this time, this is August 3rd to August 22nd. This was a very heavy move up. So I should have been cautious of maybe starting to turn on the EA here and then being in buys only, I would have gotten smoked. But again, once you have that opposite closure, you go ahead and close any running trades you have open from the opposite direction. But again, if you have like a personal account, you can survive drawdown and yeah, but just, just find something. But if consolidation is working for you, well and good. If it's not, hey, there's instruments out there you can use to tell you the direction of something. Hey Steve, where do you see what do you see on EU and gold?
It's kind of hard to say right now. I just hit my higher time frame objective today, so I kind of want to see what I wake up to tomorrow to make any judgment call. But I think I'm overall bullish dollar for the rest of the year, really. So I still see us going down on the higher time frame.
For gold?
Yeah, for gold too. Although we should see a retracement up on gold at least.
So you see like what, lower 1800s or something?
Let me look at my charts today, and then I'll post something in the group channel.
Okay. What about on EU?
EU, shoot, let me see. I think on the monthly time frame, I'm looking at least going down to 104. And man, I wouldn't be surprised if we get back under $1 in the next few months.
That's gonna be good. Time to go back to Europe.
Time to go to Europe.
And okay, yeah, yep, yeah. And I normally tell you guys too, man, when Steven's and I's biases align, because I know Steven was like bearish on gold when I was still bullish, like up here, and then I got that daily closure. Oh no, my bad, that's US 30. I got that daily closure here. Yeah, but yeah, I think he got this buy or the sell, I think 1949, 1953 area.
Yeah, let me look at gold. I need to look at gold again. I don't look at gold too much. I'm usually just looking at EU and dollar.
Dude, I can see myself in the past just buying and buying. Like every time you buy, goes up, gives you like $50 profit, and then it dips.
I'm beginning to like gold though. It kind of moves pretty smooth.
Yeah.
Gives you some good swings.
Yeah, gold is pretty good. Yeah, especially if we do get that retracement back up.
If we need to put some more focus on gold and NASDAQ again.
Yeah, the candles on gold are looking crazy. Like if you go on the 5 minutes, this
Things just melting since last week.
Yeah, this
Man.
Yeah.
Cool.
All right, Pips. I will see you guys tomorrow. I have to go back to what I do out here.
All right, man.
All right, guys. See you guys tomorrow.
Yeah.
All right.